Let's bring on board Deepak Shenoy as well. Deepak, hi, afternoon. We were just calculating, we're just 1.5% away from that all-time high on small caps. And to think of it, the sell-off in the month of March was all driven and concentrated within small caps. But do you think this, the FOMO crowd has already made a comeback?
It seems to, Aisha. In fact, I think where we are right now, we've seen a lot of the earnings still yet to come. So I think a lot of stocks will react after results. To be fair, I think markets have seen a lot of retail participation. Last month, it was mostly FI participation. This time, it's more retail. That's on the buying side. So, well, time will tell whether these all-time highs will hold. Usually, markets tend to go up in the long term. So, all-time highs are always broken. Whether it happens now or 6 months later, I can't.
Taken. I think we do have you on a bit of a bad line, Deepak. We'll try and reconnect with you. But in the meantime, wanted to highlight Vodafone IPO, Vodafone Idea FPO, that is, because that seems to be fully subscribed. In fact, it was 2.9x now. Retail is not fully done yet, but I think QIB is clearly showing a lot of interest, and ditto can be said about the HNI as well. So the retail, I think, is still below 0.6, 0.7x. On the charts, of course, we are seeing a bit of a reaction and an adjustment happening given the fact that the price range for the FPO is 10 to 11 bucks, whereas the stock is trading still above that 12 rupee mark. So there was a bit of an adjustment there. But other than that, GSPL is the other one, wherein the circuit opened on heavy volumes. Remember, it opened with a bit of a gash down. It was down 20% for the longest time. But then the circuit opened in the last few minutes, in the last few hours. But the stock is just between that 16 to 19% mark. Kunal, your view on the charts of Vodafone as well as GSPL?
So GSPL, I think after today's sell-off, the stock would take a lot of time to stabilize, because what the stock has done today is managed to break below the 200-day moving average after remaining above this critical moving average for, I think, the last 4 or 5 months. I think December or November second half is where the stock had actually broken past about the 200 DMA after a mild correction. So I think it's now reversed the entire course for itself, and this could probably be a point where the stock may correct and I think even come back to 280, 265 kind of a level, which was the previous major swing lows. Vodafone Idea, on the other hand, I think the stock has bounced off quite well from the 200 DMA. It's retraced from 15.5 odd levels to now 12, 12.5 approximately. That's the range. It's almost like a double bottom formation for the stock on the charts, on the short-term chart. So not initiating a buy, but I think possibly if the stock comes back about 13.5 levels, which is a breakout zone, that's where I would probably believe that momentum could come back again for Vodafone Idea.
Right. Deepak, what's the call on the Vodafone FPO? Worth a shot?
I definitely, I have a problem with Vodafone in general. I think we've got an issue with what their cash flow situation is. It's a lottery ticket in the form of a Supreme Court case where they will hear whether Vodafone is actually supposed to pay all these ATR dues. But if you take that out, there's a 30,000 crore payment coming next year after October 2025. There's a 40,000 crore, 43,000 crore payment every year after that for 5 years. And this is a company with negative equity. They have more than 1,60,000 crores negative equity. We will therefore, I think, see challenges in terms of cash flow in the next year. Whether this FPO goes through or not, the long-term approach over here would be they're going to need capital. Birla is putting in just 2,000 crores. Vodafone is putting in nothing. The government won't support it beyond a certain point. I believe here we have, there is a problem over here, and I don't want to take that risk.
Just think about it. If you're buying Vodafone Idea, what are you actually buying? You're just buying a hope that things will stabilize. So surely from an existential crisis, they will come out. If they are able to reduce debt, which they will, and put money back in capex, the relevance of the company when it is a weak number 3 could become a strong number 3. They're not going to become number 2 or number 1. And if you are a minority shareholder, you would say, what am I getting in return? I'm getting a very diluted equity now. Now you could conversely look back and say, at 10.5 rupees, if you apply for the FPO, which is at a discount to the current market price, you actually have very little to lose. And if the enterprise value goes higher, which is the company, debt plus equity. Equity is the money which you get from shareholders. Debt is what is from the bank. If equity values goes higher, the market cap will go higher. Now that's a judgment call whether you want to buy it or not. But I'm saying that if you're buying Vodafone Idea, you should just remind yourself that it is almost like buying a stock at an option value. It may go up 50%, but if it does not go up, the chances of losing money from 12.5 rupees, I think will be significantly higher. That's my limited point. So Kunal, now you're getting the share at a discount, which means in a couple of days the allocation comes to your demat account. You will get it at sub 11 rupees.
Yeah.
So does it make sense to short Vodafone Idea? Because you will get the allocation. You pretty much know that which way the FPO is moving.
See, that arbitrage has already happened for Vodafone Idea because the stock in the last 2-3 days, the futures has already gone into a corrective phase. I think 13.5 is where the stock was 3-4 days back. Now we are almost at 12.25 for the stock in terms of the future. So I would probably believe that arbitrage has already happened. What now matters is that if the stock is getting into an uptrend, which are the price points, which are the levels which makes a lot of sense to try and buy and expect that the stock would get into a breakout. That I believe could be the first important resistance point, which is 13.5, 13.75 for Vodafone Idea. So I think below those levels, the stock may try and just about languish like what it has been doing over the last few weeks. But I think above those 13.5, 13.75 levels is where I would believe that there could be a significant bout of momentum.
Deepak, do you track persistent systems closely? Did you find the results and the commentary disappointing as well, the way stock is reacting?
We own a little bit, so little biased here. But the results are okay. 25%, 13 or 14% annualized revenue growth. I think the stock ran up a little bit too much, perhaps, and therefore is correcting on valuations. But I don't see anything really fundamentally wrong. I think all IT will suck for most of this. They will not create great returns. I'm okay with that. You have to have periods of downs, consolidations, all that stuff happen. A large part of what's happening in the IT services business is related to business changes within the US. Companies themselves changing. They're not hiring for the most part. So there is a cost consolidation happening. And finally, eventually, as some of the other areas from AI to a bunch of other services around, I think they will start.
Taken. In fact, we did listen into the con call earlier today, and the management did say that FY25 margins are going to be at similar level or very range bound in FY25 as well as it was the case in FY24, while Street was penciling in an expansion in margins and hence the disappointment. Listen into that management take.
Our EBIT margin for the Q4 came in at 14.45%. The Q4 EBIT margin was in a narrow band compared to the last quarter. This was on account of ramp-up of larger vendor consolidation deals that we won over the last couple of quarters with a relatively higher on-site proportion to start. The ramp-up in this quarter included a one-time transition cost along with lower utilization and higher travel cost. This impacted the EBIT, which was compensated by a reduction in earnout liability with respect to one of our acquisitions that did not perform in line with our business case. Sunil will provide more color on the EBIT margin movement later in this call. During the next 12 months, given the challenging macro environment, our goal is to maintain top quartile growth while maintaining margins at the current level. We'll be working towards improving utilization, on-site offshore mix, and other operational efficiencies to ensure we keep moving towards our medium-term target of improving margins by 200 to 300 basis points over the next 3 years.
Back with closing trades right here on ET now. Metropolis, that's the one which has shot up quite nicely. A good 7.5% move is what you're seeing on that stock. There's ABFRL as well, going strong by 4%. That's the other buzzer today. Look at Bandhan Bank, pretty much undoing all of last week's damage. 4.25% higher on this stock as well. Exide has really been on a tear. Almost on a daily basis, it's been perking up and hitting fresh life highs. Another almost 6% of a move coming in on Exide today as well. And Voltas, of course, after that upgrade coming in from UBS, that also holding out well. Kunal, let's take a look at the charts of Exide as well as Metropolis both.
So Metropolis, except of course the stock has done exceptionally well post that news flow for the stock, and I think the move for the stock started off when the stock was almost at 320, 330. Remember, towards a point when the stock had moved up to 400 mark, now comfortably above the 450 plus levels for Excite. So I think the stock has done exceptionally well. It's almost 50% up so far in this series, and I would probably sense that this could be a precursor of a strong up move going forward. Now I'm not sure whether the stock would probably get into a much more stronger follow through up move next series as well. Typically we see that after such kind of move, these stocks they generally tend to consolidate into a narrow band. So my sense is 450 could be acting as a pivot range for Exide, and maybe the stock can fluctuate into a 10% band from that 450 odd levels. Metropolis on the other hand, I think after the last 3 days of sharp correction prior, I think from 1850 mark or 1900 levels, the stock had fallen down to sub 1700 mark. Now on Friday what had happened was the stock had gone to a significant discount in terms of the futures. So the futures was almost at 1650 levels and the stock had crossed the 1720 plus mark on Friday, and that discount is getting narrowed today, and that's why I would believe that the stock could actually be one of the better moving names going forward. The breakout point for Metropolis is around 1850 levels, which is the previous swing high on closing basis. I think a crossover about those levels could lead to at least another 10 to 15% upside.
Morgan Stanley also has initiated coverage on diagnostics, right? One of the reasons why the stock is actually perking up. On Dr. Lal, they have initiated coverage with an overweight. For Metropolis, it's an equal weight. And they're saying that expansion is easy. It's about profitable growth and profitable scaling, which is the biggest factor to watch out for. Deepak, any thoughts on the diagnostic space?
We like it. It's been an interesting space because I think diagnostics itself is going to change dramatically, especially when you have the logistics and transportation, and perhaps at on-premise or remote level diagnostics possible with new technology. I'm sure we'll have a lot more. For instance, in India, ultrasound machines are regulated in a very big way. They're used for gender, checking before birth, but they're also useful for a whole lot of other purposes. As we mature as an economy, I hope we will have more establishment of ultrasound centers, and therefore it will benefit a lot of the diagnostic centers, at least the chain going forward. But these are long term games, so you'll take about 10-15 years for many of these things to evolve. Meanwhile, we're seeing a lot of competition in this space because the hospitals themselves are becoming places for diagnostics and also establishing their own diagnostic semi-centers, if you may. So that might be one reason why a pure play diagnostic chain may not be as attractive as a hospital chain by itself.
But Deepak, this is a space where peak growth is over post-COVID. This is a space where growth will be 12 to 13%, 14, 15% maximum. That also includes acquisitions. Competition is intense. Price is coming down on a daily basis, and all of us get 1 or 2 messages directly from either an hospital or a diagnostic firm that you get your full body examination and you'll get 50% off. So I'm just wondering, where is money to be made for shareholders? As a prospective patient or somebody who wants to get his body screening done, this is great news. More competition is less money. But for shareholders, more competition is always bad news.
Yeah, I mean, the idea would be if it becomes affordable, people will have checkups done more frequently. And I think in general, India does not get diagnostic checks done very often. We often think that we're healthy, and therefore, as more and more of these issues get obvious, that there are silent killers in the form of, say, inflammation, in the form of other pre-diabetic, indications. I'm hoping at least here the relatively mid-affluent or early affluent class will be getting a lot more tests done. I don't believe there's a lack of growth in this space. You're right, 10, 15, 20%, maybe the growth rates of the industry as a whole. But I think the problem with competition is that it's going to be spread across a very large set of beneficiaries, and one winner takes all, or even 2 or 3, a duopoly, triopoly. It's not going to happen. So therefore, there's no easy pickings here. I'd rather pick the hospitals because they will do multiple parts of this value chain, not just the diagnostics.
Another stock which is worth revisiting, I think, is Loris. It's having a good day. Exide is like on a different tear. Biocon is making a comeback. That's looking decent. You've got Bajaj Finance. Numbers are due this week. That's holding on very smartly. Bandhan, the CEO and founder's exit, Mr. Ghosh's exit, did create stress on the stock, but that stress lasted for a very, very brief while. Aditya Birla Fashion, Aditya Birla Finance, they both are doing okay. If last couple of years were really dominated by Tata's and the Adani group of companies, could it be JSW, Welspun, and could it really be Birla group of companies going forward? The price action is telling you something very different, but persistent is where there is no recovery whatsoever. Mother Indigo is again gaining altitude, 3,700. Deepak, there are plenty of reasons why you should not buy airline stocks. But Indigo has gone from 2,000 to 4,000. Why is that?
I think, honestly, right in front of our eyes, we've seen Jet effectively, go to zero. We've seen Go Air vanish without a trace, and almost SpiceJet not quite as well. The new entrants in the space, or the new entrant, we've seen them also struggle. Vistara and Air India are probably going to be one, so they're going to have integration issues while they go forward. They're the only ones that can actually provide competition. So effectively, we have a two-player race here, and to a certain extent, I think Indigo's relatively high focus on efficiencies have helped them now. The problem with Indigo is that to a large extent, a lot of their profits seem to come from crude prices, which have been stable. So that's why they're able to make a lot of profits. But in the last decade or so, whenever we've seen crude prices spike up, Indigo's profits have gone, just like almost gone to zero and all that stuff. And that is a case where I would say, if that is the risk that you're playing in, then you should play the stock as a momentum stock, not really a long-term story, because the pricing power simply does not exist, or did not exist in the past. On the pricing power front, travel and hospitality has really, really increased in the last year or so. So something there fundamentally could have changed. I think, I don't have an investment in airlines or in Indigo in specific, but I do think useful place to watch. I may be wrong in not having invested, but I'm invested in the hotel space, so kind of making up in that. It'll be interesting to see how the last quarter results will be. I don't know if they've come already.
Okay, point taken. So that's the view coming in on hospitality, aviation in particular. But Kunal, what's the view on ICICI Bank versus an HDFC Bank? One is clearly batting for the bulls with a gain of almost 2%, but HDFC Bank just refuses to move.
Yeah, refuses to move. The stock has failed again to cross over the 200 DMA and missed it, I think, by a margin of just 0.5% or so. But I've seen this historically, that whenever a stock attempts the 200 or a key resistance point for 3 or 4 times, eventually those resistance points, they generally get taken out and you see a start of a fresh uptrend. So as of now, it's more of a wait and watch for HDFC Bank. That 1550, 1565 odd levels is a key resistance point now for the stock on the very, very short term charts. So we may just expect the stock to just languish into this mild trading range around the 1500 as a support or a base for the stock over the near term. But ICICI Bank would be an interesting play, because the stock, I think last week or the week prior to that, had shown a potential, or had come closer to a potential breakout above 1120 levels. All of a sudden, the next subsequent 3 days, the stock had fallen down to 1070 mark, breaking below the previous swing lows and now managing to rise up higher. So when we look at this, the stock has given a whipsaw move twice in the previous swing breakout as well as a breakdown mode. So now, whichever way the stock breaks past, or whether it breaks below the 1060 mark as a support or about the 1120 mark on the resistance side, I would actually expect that the stock could get into at least a 5 to 10% swing in that direction. So we'll have to be a bit more patient over here, and a breakout above 1120 mark, I think, could take the stock significantly higher from those levels.
Right, okay, that's the comparison between ICICI Bank versus HDFC Bank. But Deepak, before we let you go, anything that you may have bought in the past month or so?
So we have done very little buying, really, waiting for results. But I've got a little bit more into the power transformer space, a little more into the hospitality space, like I just mentioned. We're adding on to our current holdings for the most part. Especially we did a bunch of extra buying in some of the smaller caps which had fallen last month. Though of course you can't call BSE a small cap anymore, it's now a mid cap, but it did fall about 30-40%, and then we'd added more stake in that. We're very interested in the financial investment slash insurance kind of space, where we feel there's a lot more assets are going to get created. India is going to move to from about 15 to 17% of GDP in mutual funds today to and to about 25% in mutual funds, and perhaps a greater percentage of the stock ownership, which is currently only 9%, held by retail. So buying a few stocks in that theme as well. But again, when results come, we might change and add a bunch others as well. Nothing's super exciting right now, but we'll wait till all results are in.
We'll chat again then and see what the revised list looks like. But Deepak, thanks as always for taking the time out and joining in.
If you like this video, then like, share and subscribe to ET Now.